The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and exclusively soft host. Once more, do we go into the breach, dear friends?
The following takes place between 2 p.m. and 3 p.m.
So what do we have happening today? Well, as we started saying on Friday, you better get ready for the bounce.
Cat bounce.
Yes, it was the bouncy, bouncy song on Friday and the bouncy, bouncy song today. S&P's up 43. The Dow's up 492. Columbus sailed the ocean blue. Nasdaq up 118, and was this fairly predictable? I thought so. We're going to talk about a few of the reasons why. I got something in my eye, so if you're wondering what's going on here, I hopefully I'll get it during the break, but pretty predictable. We had literally everything is oversold, and even more in some ways, as March of 2009. We've had brief pushes to the lower side, but there were a handful of signals saying that we were going to have a rip and tear face-off rally coming in. The signals really started coming in on the close on Thursday, and we got even a better signals, some more signals on Friday. It was a incredibly thin lack of liquidity, i.e. no one was going to step in, and the spreads were huge. Normally a pretty good indication that that's where you're going to turn the market. And literally everything was like whale poop. It just doesn't get any lower. At the lowest of the ocean, you're not getting any lower than that. And literally everything had been so washed out that you could have seen that we were going to get at least a significant bounce, if not a monster bounce. I was looking at a monster bounce and started adding positions on a Thursday close, added a few more on Friday, and was even in the dips buying more than my positions, so overloading into the close. Finished those positions out, even had some day trades that I rolled out. It would have been a little bit better off today, but pretty good. So we're going to talk about all those things. And in fact, I'm going to almost say this is going to be a master class in confluence levels, and I'm going to show you a handful of those. If you've got Tom's book, I would brush back up on confluence levels because a lot of stocks bounced right off those confluence levels in trading in Thursday and Friday. And, for what we have here, you really had to say that you were getting a little piggy thinking the market was going to go down a little bit more. I think if you looked at enough stocks, if you looked at indexes, maybe not, but I probably looked at, 1,800 stocks over the weekend, and we're going to show you kind of a composite of best and the brightest of confluence levels today. So we'll keep an eye on that. And what else? I think that's it. I'm expecting, by looking at options, that we could easily see 2,700. I said that to several folks, and I think one of the guys in the den this morning, that it certainly looked like option market makers were betting that Friday's expiration came in at least at 2,700, and there's a 10% possibility we go to 2,750 on the S&P cash. And again, even if you're bearish, that would only be a bounce in a downtrend. If you're bullish, we're on a big ABC even higher. So I just don't understand probably getting short now. You know, if we get a signal, I'll be glad to change my position, but this seems to me like we're going to see a lot of stocks going higher. Some stocks are just going to kind of stop like they hit a wall. We're going to discuss that today. That's kind of it. In the meantime, we'd like to start to show off a little bit of history. And it's all just a little bit of history repeated. On this day in 1809, Abraham Lincoln is born in Kentucky. Lincoln was one of America's most admired presidents. Grew up a member of a poor family in Kentucky and Indiana. Attended school for only 1 year, but thereafter read on his own in a continual effort to improve his mind. As an adult, he lived in cities and performed various jobs, including stints as a postmaster, surveyor, shopkeeper, before entering politics. Today, he would be laughed at because he didn't have a college degree, wasn't from the right family. But I think Americans know you can do, not what, not who you know. Although a lot more times it's all about that, right? Do you speak the right way? Did you go to the right college? But character runs deep. It ran deep in Abraham Lincoln. And I'm going to say that, Washington, Lincoln, our best two presidents. I don't think anybody would complain too much about that. Okay, so what else do we have? Got a couple of minutes left here. Let's go ahead and start getting into charts today. As I said, I want to actually start talking about confluence levels. Confluence levels are nothing but Fibonacci ratios put together. And if you have a nice level put together, it acts as extremely good support and resistance levels. It is not uncommon for them to be pierced only either that day or the next day be closed right back above these levels. Now, probably the biggest thing is this was a system originally designed by Joe DiNapoli. He used to live down in Naples, Florida. He's moved to Orient, as I heard. I email him occasionally, and he tells me all the things that you can't do. And, of course, I've written the software, so I know you can do it. But for a long time, he told me how I couldn't do confluence levels, and I couldn't do Fibonacci's automatically. And I found out later, of course, he was was paying to have his own software written. I kind of liked all that stuff about it. Confluence levels are nothing but when, and they don't always do this, when the 382 of one leg of a Fibonacci move and the 682 of the other one are very narrow. When they're wide, it kind of is the area the stock going through tends to maybe slow down. It's like a little snow on the road. But they're very, very tight, like we're showing on Alcoa. They tend to act as very strong support and resistance levels. So we'll talk about this probably for the whole show. You can always give me a call at 877-927-6648. We'll talk about some of the settings in art of timing the trade charts that will help you out too. Be back in a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
It's a special month at TFNN, and with market volatility back, we've decided to hold an open house in our Tiger's Den. For this month only, you can get a full 30 days of Tiger's Den membership without paying anything. The Tiger's Den is our interactive chat room where you can chat with other tigers and tigresses along with the TFNN hosts during each of their programs. For all of the details and to start your 30-day free trial to the Tiger's Den today, visit the front page of TFNN.com before this deal is gone.
Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we're back. Hopefully everything's a little bit better. Little connection issues today. Anyway, we were talking about confluence levels, and especially in this environment, it is incredibly important to know if you're a big Fibonacci trader and ABCs. One of the things I did like was that Fibonacci's could work, but they were kind of, you know, especially if you're new, it's hard to get a real good sense if it's a 382 or 5 or 618 retracement, and you're kind of guessing, and it's kind of tough. Confluence levels put two of these together, and I'm going to say that they're 4 times more accurate than using a single Fibonacci by itself. The downside is that they're not always around. And in very certain markets, like right now, you're going to find out how many of these stocks just come and perch on these levels. Again, really wide differences between the 618 of one and 382 of the other is they're just kind of mushy. But one of the things you can do with confluence levels is get huge risk reward, because basically they break those things and don't pop over in a day or so. You know pretty quickly whether or not that's going to be a good level. Now, I had probably, I'm going to say 500 of these things. I got the ones that were kind of easily the easiest ones for new traders to see on the show here today. So we're just going to go through some of these, and I'm going to kind of talk about what you have. Now, on Alcoa, we start off on the June 16th low of last year, 29.55. Now that's, if you read Joe DiNapoli's book, he calls that the kind of the beginning node of all of it, the root of them. His book's like a couple $100. If you want a slightly modified version that includes volume, for whatever is it half as much? You can get Tom's book, and I helped with the charts in that, so you might get a pretty good round view of it. If you haven't read it, I recommend it highly. Also, I've got kind of a short tutorial on how to use the Art of Timing the Trade software in ABCs that also might help you if you're still confused. You can always give me a call today. This would be a good day to do that at 877-927-6648. So what do we have? You've got the 618 of the 382. Now, one of the things that I like to do is use 1 or 2 year charts, and there's a little thing called the leg control, which is how many up down moves are in the chart, and it's not a fixed value, but you turn it up, you get more. You turn it down, you get less. You want to turn it down so you got all the major moves of the last year in, or 6 months, something like that. You don't want to be looking at the last 2 weeks with these kind of techniques. They work very well on long-term trades, and that's why I was going to say that Friday, to me, there were a variety of things that you could have said. You could have said them on Monday too, before everything broke down. But this one basically got and does tend to get the long-term in. So if you're kind of nervous about pulling the trigger on a day like Friday, these kind of techniques let you know fairly quickly whether or not you're going to do wrong. Now, I'm putting my mouse over it, so hopefully you can see it. It turns into a little hand here. But you've got just the standard retrace, I can't even say it, standard retrace levels off top, high of January 12th down to the low of February 9th on Alcoa. So you've got the 382, the 0.5, and the 618 on the back. Now, if you put those together with the major move from June 16th and the move of June 21st, you end up with the 618 on one at 46.82, and then you've got also another one at 46.82 on the 382. So this shows you just literally how tight these things can be. And when these things are that close and that tight, they're exactly what you want to see out there in a confluence level that tells you exactly where the battle line is going to be drawn. And maybe you don't get it the first day, but a close back above that line after just a day, maybe not even a day. A lot of times you'll get these spikes like you did get to 44.15 on the 9th on Friday. So you see that spike down there and you see it dry. You see everybody throwing the baby out with the bathwater, and you go, okay, I'm right at this confluence level. If this thing pulls back up here, I can maybe buy it, put a short stop underneath it, and this thing needs to close back above that line in a couple of days. So you can see Alcoa is in it. Now, does this mean it's going to rocket back up? Not necessarily, but if I was short something like this, you got your move out here, you kind of know where you want to cover. So now the next thing is to watch this go back up against and maybe up to the 618 retracement, which would be 52.40. And at that point, you have to decide, is this an ABC down, in which case you want to go short, or is this thing going to go retest the high of 57.50? Personally, I suspect that we had the big correction for the year, and now we're going to have more of a traditional market of slower moves up after we get people to quit shorting this market on a hourly basis. And generally that just happens over time. But after shorts make a lot of money, they think it's going to continue moving down. Generally, you get a respite, even if you are in a bear market, and that respite might last for a while. Okay, so what do we have up here now? We're up 42 points on the S&P cash, 501 on the Dow, and 117 on the NASDAQ. Okay, so we looked at that one. So let's look at some other ones out here. That's why I like these long-term charts. Somebody in the den saying an hour is a lifetime. It is if you're trading intraday, but if you're trying to buy stocks and sit on them for a while and make more than 50 cents, not so much. If you're trading futures and highly leveraged products where 6 hours from now you can be bankrupt, a completely different story. But again, if you're trading individual stocks, for the most part, you can sit on it for a day or two and it's not going to matter that much, especially if you've set everything up correctly. Now, here's one in Aetna that shows kind of what we're looking at too, and that is the Pierce down to 173, but you pretty much closed right back up into the confluence levels. This one's 175 to 177. So you got about $2 on a $175 stock. I like to see these things at about 0.75% of the price or a little lower. When we come back, we'll look at a lot more of these throughout the show. Give me a call, 877-927-6648.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And some questions come in the den, one about IEF. And the question is, do more shares become available to short on a bounce, or at least structural flatness? They could. That's if other people actually cover. But generally, if it's a problem getting them and other people want them, you can pay higher rates. And if you're an institutional guy, you can say, hey, I will short this and I'll give you a couple extra bucks. In fact, I think the premium on GoPro, when it was up over 100, people were paying 20 bucks to get it short at that level. So literally it had to drop 20 bucks before they even broke even. And they were literally losing 20 bucks to start the trade. And that gives you kind of an idea. It depends on how much those shares are in demand. Is there an easy way to look at it? IEF. Try to take a quick look at it here. Hang on a second. I'll bring something up. This is the 7 to 10 year Treasury. Let's see, IEF. Okay. Well, you certainly had a lot of people shorting on Thursday. This thing had almost 30% short interest just during the single day of the IEF on Thursday. Friday didn't have that much, 13%. So you had a ton of people climbing on this thing, which is probably a pretty good indication that this thing is kind of close to being washed out too in the short term. Man, this thing's had 60% short dates. February 1st, this thing, 60% of all trades originated with a short sale. So give you a little idea just how wicked I think that it could be in that business. But that also kind of tells you something about how they knew what was going on in the bond business to begin with. I think we've talked about that. I can't believe it. Someone's talking smack about Lincoln. I don't understand that. Anyway, what do we have on this one? You can, in a bounce, find more shares. But the question is how many are outstanding already? And you can go on Wall Street Journal and find the amount of days to cover. But it's about 1 day to cover on the IEF. So even though you've had a lot of people shorting this thing, it sounds to me like they get off the short at the close of the day and they don't hold it overnight. So it seems to me that these guys, that the short interest on this should be fairly easy to get. You've got, it's pretty minimal, at least for the one that they reported on the 31st. You get short reporting twice a month. And this is the last one I have is on the 31st. Actually showed not a lot. So maybe all the shorting in the last that came after that close date has been where everything is. So I don't see a lot in that one that drives you anything. And Warren in Denver says it's 16 degrees outside. Well, I got the air on and headed out to the pool as soon as the show is over. So we'll see. Okay, let's get back to... I think we were talking about Aetna, but you can email me too at path@tfnn.com if you would like. So, I mean, we've got a lot of these stocks that had fairly decent confluence ranges, and Aetna is another good one to take a look at here. If you look at September 22nd as the beginning and the first ABC B point up on October 26th, and the second one as January 29th. If you put two Fibonacci's out of those two positions, with 164.52 being the first of the ones, and that September 22nd as the second one, and 194 is the common number used on both of them, you'll see that how this sets up. It's 176.93 to 177, and that's going to be very nice support levels there at 177. Doesn't mean that it's going higher. You probably don't want a stock that came down on a lot of energy, but it does mean if you're short, a lot of times if you're going after any money after that, it may be a very shallow well. Okay, let's take a look at another one. Another one that looked really good out here if you're trying to figure out how to set these up is BHP. This one on the May 4th low and on the September 28th low, and then using the common number of January 12th high at $50.79 sets up this one. Now this one was 44.07 to 44.14. It got to 44.07, which is right to the penny. Doesn't always happen, but does. It spiked that on Friday. And you got your, normally I like to see these things at least touch these, and then you can go back in it. So this one had a nice little bounce out of here. The energy wasn't more than the energy up on the way down, but it was still fairly strong. Now you start looking at the Fibonacci moves on the way back up. If you think this is an ABC down, then you're probably looking at this thing and that it didn't come all the way back, at least a 5.0 retracement level and maybe a 6.18. That would take you to $48.22. So you could set up your trade saying, okay, 44.07, that was the low. I'll put my stop in at 43.50 or something, and I'm looking to get 48 bucks out of the trade. Now, I kind of look for more out of a trade than that, but that's kind of how you set these up. Let's go back and look at another few of these. Another one that looked really sharp out here and very complete was Avis Budget Group. Okay, so this one is another good one to set up here. Again, you want to look at the common number between the two Fibonacci moves, and in this case, if you look at the art of timing the trade charts, it does it basically for you, which is kind of nice. Again, it's kind of, these things do take a little bit of time to do by hand, and one of the reasons why I wrote the software was mostly for myself. But January 12th is high at 49.41 is the common number. So now you look back at the first move down, which is November 15th, and then the second one down, which was June the 9th. And again, you get one within a few pennies at 30, what is that, 38.63 to 38.46. You got about 20, 30 cents out here. This got to 38.79, so it got right into that level. And now you're kind of sitting out here. Again, pretty good energy from that November 15th low to the January 12th high. You had a brisk pullback, but it wasn't as bad as some in the markets out here. You hit that level. So again, if you're trying to pull shorts off and you want to know where you want to have your point to cover, these things work very good. Now, I can understand that a lot of people see huge destruction in the market. They're going, the market can't go higher. I'm scared. I'm not going to buy it. But at the same time, any of trade started before this thing would have some kind of trading plan. And guess what? You would have already known that this confluence level right here at 38.63 existed. And I would think that a prudent trader might have that in his plan to where he was going to cover his short position. We'll be back in a minute.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks! Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
We're doing a master class today, kind of on confluence levels. So we're going to take a look at that. And of course, if you've got a stock that's been hammered, you were long the thing, you wrote it down, you're kind of wondering, you know, where can I go back and get a fairly decent bounce and I can get out of these things. CBS has got a kind of a bouncy chart out here. This is kind of the opposite of what we were looking at. This is going to be resistance on the way back higher. April 5th, the high at 70.10 and the high on January 18th are the ones I'm using for this. And that gets you to about 58 bucks on a bounce from about 53 right now. Kind of close, about the best you can look. That's about halfway through this huge down day candle, which gives you a good idea of where you can get out of fairly quickly if the market continues to move higher. Cabot, I think that's it, CBT, Cabot Corporation. I'm going to say that a ton of stocks look this way, and that is that you got kind of a little bounce out of these things. Then they came right back down and tested again these. Let me zoom in a little bit closer so you can see. I mean, so you had some real whippy trading out here, but they continued to support this level. And again, I can probably find a couple hundred stocks look just like this. And the confluence level on this one is just under that, what is it? 60.81 to 61.59. So you kind of know. Now, it pierced this one twice on 2 different days, but continued to close back above that level, which gives you kind of a good indication of where support and resistance is. If you went long this stock, what you want to do is just kind of hide your stop back underneath that confluence level, because if it breaks it again, probably going severely lower. Okay, here's another one that's the same kind of thing. Let's kind of clean this up a little bit. Here we go. There we go. This is Education Realty Trust. This is EDR. Another one that's got a good one. What you want to do is try to take a long one and a short one. You don't, you can do some of these other ones, but generally, if you can kind of bring it into the last big one and the last longer term one, this one is the February 27th high at 42.06, then took the high of December 19th at 37.29, and the low, of course, of actually even today sets this thing up again to a bounce to about 35 bucks. So if you think this is a horrible market and it's going to hell in a handbasket, just wait for your bounce up there to about that 34.65, 34.65, 34.63 area. And if it gets up there with light volume, then you have a good possibility of the next ABC down. And Education Realty Trust, all these REITs have looked horrible. We talked about them. In fact, let's go back and look at the VNQ because it was down kind of at lows earlier in the day. It spiked it again. So we might have some kind of temporary lows around the $73, $74 level. In fact, I think on the longer term, we broke that 74.69 from November 10th. This is the REIT ETF. I talked about this one being the first one to break, and how most of the destruction in previous huge destruction markets, 2008, 1929, 1960, 1963, 1987, all tended to see these REITs have the majority of the long-term losses in the market. But keep an eye on that. It does look like it's at least steadying up a little bit. To what do we have here? Let's go back to 1 year. Okay, I got any more emails? Okay, we'll get to that. Still bitter in the deep south. Okay, Edison International, another good one. This thing has come down rather dramatically from 83.38, the November 15th, 2017 high, and it's had a couple of these moves down. So now you can see the next moves higher. Let's say you're stuck in this thing, or you're thinking this thing continues its ABC down. You've got two beautiful confluence levels. The first one at 63.77, the second one at 67.32. And the 67.32 would be a test of the February 1st spike. And that probably a pretty good indication if this thing bounces. That's where pretty severe resistance is going to be unless something changes. Another good example of EPAM systems. EPAM is the symbol on this one. You've got, of course, 119.18, which is January 26th high as the common number. Your first Fibonacci number is from the December 5th low at 96.11, and then the next one is at 77.96. And again, you're going to see this nice tight area where this thing pierced it on February 9th. And did so, close back above it. At that point, you just go ahead and either during the day or the close say, okay, I'm going to go ahead and jump in this thing. I'm going to see if it closes back above this resistance level either today or tomorrow. I'm going to give it just about that much time. And generally, these things work out extremely well. This one was at 104.92 on the high side, and 103.43 on the low side. So you got maybe a buck and a half out here. So about 1% on that. And of course, you've moved right back out of that. The energy on this one from the December 5th low to the 26th high, January 26th high, wasn't all that exciting. So am I thinking it could do more like a retest of the 119? That may be the double top to short. You also want to watch this thing at 112.63. That would be it. Now, the second time or the third time through these confluence levels, you get back down there two times, three times. That's when you blow through those, and a lot of times you just jump over them. The first couple of times, you can make a fairly decent case that that's where support is. If it decides to move down there and move through it, it's probably going to do it with a gap over it and underneath it, and sayonara. It isn't good to be you. Okay, let's take a look at some other. Okay, another great example of these are the FEM, which is the Emerging Markets Alpha Index. Beautiful call on this up to 31.32. Came back down, pierced the confluence level on Friday, closed right back in it. Nice little pop up here too. And again, my guess is that on these ones that had fairly strong energy on the way down, you're looking at something like a 50% to 0.618 retracement. That would be to 29.75. So if you're long these things, try to figure out a way to get out of at a 50% or better retrace and see how they're doing. But you're going to get an opportunity to get a lot of that back if you were still in these things from the highs. And on the opposite side, if they go up with light volume, get an opportunity to set up the ABC on the way down. But know that that confluence level may take a couple of times to break through on the way down. We'll be back in a minute.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Achievers rise above the rest, and when they see an opportunity, they take action. Massive action. Achievers capitalize on every resource in order to experience success at its absolute max. And on Wednesday, January 31st, from 5 to 6 p.m., I'll share with subscribers of Mastering Probability how to achieve even more success with the extraordinary tools that I use to call the markets. These tools predicted the Ebola 2015 stock market bottom, the December 2017 gold bottom, and why subscribers added to their mining positions this month as well. Learn the pattern that projects the Dow's next upside target of 30,740. Folks, great moments were born from great opportunity. So don't miss this opportunity to take advantage of my 30-day money-back guarantee for Mastering Probability. All the details are on the homepage of TFNN.com. Sign up today and reserve your spot for the ultimate subscriber event.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we're back. Let's go back and look at this. Again, you'll have various moves in these 618 and 382 retracements, but let me go ahead and zoom into these so you can see them a little bit better on Tiger TV. Anyway, like I said, it's not uncommon to see huge moves in the market with hundreds, if not thousands of confluence levels in it. The first time I saw it, I'd written a kind of a scanner to look for these things, and I think it was in 2004 or 5. I'm going to say 2004. I didn't have any charting capability for it. I think we wrote, what, a 2006, 7, The Art of Timing the Trade charts came along, and I had the ability to actually chart these things off. But I could do a scan for them and find them. which was a big deal for me at the time. And I think I was talking to Tom when we were talking about doing the actual software. And I can't remember when it was. And if I went back in the charts, I'd probably look at it. But we saw like 500 of these things all develop and hit in one day. And the market just turned around and left. And since then, if you're looking for major market turns, you start seeing a whole ton of these things. And actually, I can just eyeball them now because I know what I'm looking for out here, that there's going to be one that sets up fairly quickly. But there are tons of these things, and they do work extraordinarily well. I cherry-picked these mostly just because they were easy to see on the screen, especially, if you're watching on a web service or something. They can be a lot harder in other ways. I'm going to look at a few one. Another real good one out here was JB Hunt. Oh, already going to break? No, we're already done for the day? Can't be. We'll see you tomorrow. Same bat channel, same bat time. Remember to sell when you can, not when you have to. We'll see you tomorrow.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.